Good morning, traders. Welcome to Friday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check the news so that we know what's going on and when. So looking at the news for today, not a ton. I mean, we already kind of know what's going on. This is the Friday. This is quad witching. If you're not familiar with what that is, when you have witching all together, you have the expirations of a lot of different asset classes. Well, quad witching is all of them, right? You've got futures, options on futures, like everything is expiring all at once. And that kind of forces people to have to make a lot of moves, a lot of changes, and a lot of shifts. And then along with that, it's the end of a year, right? It's kind of the last big week of the year. Everything is kind of coming to a close today. So in terms of volatility, even though there's not a whole lot of news going on, there's definitely a lot of potential catalysts to keep things moving. From a news perspective, I mean, there's not much. 8:30 has current accounts for quarter three, negative 189 billion is the forecast. That's it, really. We've got FOMC member Brainard speaking at 11:10. At 1300 U.S. Baker Hughes oil rig count, and then we've got all of those CFTC speculative net position things, which really don't do much for the market at all. So what it comes down to really more than anything else is just the time of week, time of year, etc., all coming together for one big potential fireworks show. All right, well, let's jump into some charts for today so we can dig in. Today being 12/18 of 2020. First up on the list, we've got the NASDAQ, and overall, the NASDAQ is forming a really nice ascending wedge. It's got some really good continuation movement to the upside, and everything is showing that it wants to try to keep things moving. The big thing that really stands out here is, well, we're in the middle of it, right? We're not really at any area of interest. I was going to say at the area, but there's just nothing right here. Just kind of smack in the middle. So the zone of interest for NASDAQ is going to be to pull back or to go higher, just do something away from here. If it can pull back, major turning points today going to be 12,678, 12,634.75, and 12,590.75. We're in a bull market, so there's no bear turning points, just bull. See if they want to get them to bounce off of that. The big one, obviously, really stacking up at the 678 with all of that support potentially under the lows to try to drive the market higher. That'd also be a false break low of the ascending wedge. Everything looks really nice for a rejection off of that. But you never know with the NASDAQ. Sometimes the thing goes crazy and slides off an extra couple hundred points. So you gotta be prepared for when that kind of stuff happens too. Next up, we've got the S&P, and the S&P is in a very similar situation, but instead of an ascending wedge like we saw in the NASDAQ, we have a descending channel, which attempted to break higher. So it has made a new high, right? And I mean, prices did make a new high, and you could draw this up a couple different ways. This might be the start of a new type of channel, a new type of wedge, etc., depending on which one they want to go with. Right now, the majority of traders are probably looking at this one just because they can move that to the bottom, and that gives them a low that they can potentially work with. So as far as levels of support going to the upside while the market's continuing up, assuming that they're going to try to hold a higher low, one of the really big areas, depending on when it can get back there, is going to be back down towards this 370250 area. We've got that potential rising support. We've got that horizontal structural support. This is a major turning point area for the market to try to bounce off of. It did poke above the highs, so just in the event that it does want to actually make a new low, which isn't necessarily as high of a probability right now, but you got to be prepared. If it does break down, the next major turning point is at 3694.75 and then 3687, back down to the lows of all that consolidation to see if they want to bounce things back up. Next up, we've got the gold market, and gold, for the most part, still has that really, really nice long-term channel working its way higher, but we're seeing a pretty solid wedge pullback as well. Fairly obvious to see this just kind of narrowing in tighter and tighter and tighter. And when it's pulling back, this is when things start getting interesting, because from a channel perspective, we're not really anywhere. We're just kind of hovering around the midline. There's nothing there from the channel perspective, which would kind of suggest that a bit more downside is kind of expected towards the 1875s to, maybe just underneath 70s. But the next major zone of support from a structural perspective, excluding the channel and looking at it more as a descending wedge that would try to break lower and fail, then we've got turning point support at around 1880.3. If it does want to break a little bit lower, because while we're talking about gold here, and it's not shy for big moves, if it does want to flush down, there's major zones of support a little bit down at 1869, where we had all of that just a giant brick wall that the market finally worked through. That's also lining up really nicely with the bottom of the channel, so it's kind of a nice 1-2 punch there. And just in the event that it slides lower, although the 69.5 area is going to be the anticipated level of support, it wouldn't be a shock to see it maybe get a wick down into the 59s, maybe even a little bit lower before rejecting back up. So I love the look of gold for the upside. A lot more than I do for the downside. If sellers are going to come in, there's not really any turning point areas. The only thing that they've got to work with is around this 90.2, 90.3 area. But super, super weak. There's not a whole lot to really back them up there, and the trend is still obviously very much bullish. On crude oil, we have a wedge breakout that's getting a retest. They finally kind of broke out of this more aggressively angled wedge, and now we've got a nice little breakout pullback. Obviously, we can draw this up a lot of different ways. This is right at the base of the move, but very easily modifiable to being something a little bit shallower, to give another area of support that the market can try to work off of. So by no means is this the only one, but it's very nice to see when a breakout pulls back to the point, right? Right to the point of the wedge, and then rejects back down. There's definitely something going on there of interest, and might be a level that you want to pay attention to going into the future, where this point came together. Because this doesn't happen all the time, but the fact that this lines up almost perfectly with all of the previous movement as well, man, that's creating a pretty big turning point around that point. But if the market does want to pull back, we don't really have any areas of resistance to be sellers. But from a bull's perspective, 47.68 is the first major zone of interest. Arguably maybe a little bit further up, but it would be nice to see them slide below down into the 68s. If it wants to go a bit further, where buyers kick the entire move off, that's back at 47.46. And then to the base of where their stops will be for buyer absorption would be at 47.21. Just for, again, just an absorption underneath the lows to try to shove it right back up again. From a wider wedge perspective, we do have a little bit of room to go until we get down to those lows, and that might be the next one that we're kind of concentrating on. Until then, though, waiting for a pullback here. Next up on the euro, we've got kind of a weird looking chart from this angle. I got to get rid of that big spike there, and then it'll make the candles look a little more normal. Really good bull continuation to the upside. Obviously, that's a huge spike in channel. We've got the spike and the channel. Pretty straightforward. Now that we're breaking out of that structure and starting to form a bit of a range, typically the objective that traders are going to be looking for is a bounce off of this area, this nice consolidation, and see the bulls continue back up for another test of the highs. That's the logical next objective to go. And the fact that we have an unfilled gap now, it all kind of magnetizes to it, right? Everything points to that same spot. So as far as buyers, if they're able to get it to go back up, that's the major objective. We haven't really hit any of those zones of support. It got really, really close. But the next zone, 22,680, if it wants to go a little bit down from there, earlier sellers who have been stuck short for pretty much an entire day, they'll be able to get out of break even around 22,565. And then at the beginning of where the bulls really started slamming the market higher, at 22,450. Lots of areas of interest for the buyers, not really many areas for sellers, except back up towards the highs. And then finally, we've got our good old buddy Bitcoin, for the most part, going sideways. We had that just absolutely gorgeous rocket ship above 20,000, and now that we've broken away from 20,000, we've got some pretty good consolidation. Like we were talking about before, buyers are going to have a really hard time wanting to buy way up here. All-time highs are super unpredictable. But what they are able to utilize is after the market makes a high and then pulls back, Now we've got some structure to work with. And that seems to be what ended up happening. We had that big push to the upside. We got those high closes, high opens, acted as resistance, attempted to get above it, acted as support even a couple times. Even one more time right there, then failed through, and resistance, and not even close now, not even testing it. So that's going to be a big zone of interest for sellers floating right above there. That's going to be, hovering around that same level, the high closes, 23,411 in that zone. Now, as far as, once I can find my red color here. There we go. So that's really the only zone of interest for sellers, 23,411.27. As far as support, buyers will be looking to buy this wedge break underneath it, assuming that it's a false break. That's going to be at 22,255. And then a little bit underneath it, because we're talking Bitcoin, it's not unheard of to see it slide an extra few $100s that you weren't expecting. 21,875 down to 21,522. If it does want to pull back a little bit further, and when I say a little bit, I guess in these terms, I mean a lot of it, we have this obvious massive break of structure, right? Huge breakout of psychological 20,000 level, and there's been no retest. Along the way, there's big candle gap, or, swing gapping to the upside, and everything is projecting huge targets that have already been kind of filled. What I would love to see in a slightly wider perspective is to see it drop really far down in a quick flush, because again, we're talking about Bitcoin, and then find buyers back off that 20,000 or maybe even a little bit above it for a rotation back up. And then who knows, we might be seeing Bitcoin all the way back up to 100,000 by next year at this rate. This thing's cruising. But as it stands, I think we're just in a range. Buyers are looking to buy the dip, and nobody really wants to buy too high anymore. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. And of course, this is the Friday before some pretty big stuff going on, right? We've got all the holidays and everything else happening next week. So whether you're trading or not next week, generally speaking, the volume is typically going to be pretty erratic and pretty low. That's sort of what you expect to see. And realistically, I don't think many people are going to be trading next week. But like we've been talking about in some of the other longer term briefs, we have the situation where everybody's going to be home, and a lot of people already have accounts with brokerages that are already funded and ready to go. Well, if everybody's sitting at home and the markets are open, hey, why not? So there might be some pretty good movement next week. I'm going to be mostly eyes on, hands off, just because, again, it's the holidays. It's time for us to start taking some time off, right? Taking some mental breaks going into the holiday season, and kind of trying to enjoy it, get some time away as we go into the weekends. Like we always say, from a trader's perspective, we make more decisions in a day than most people make in a week. We deserve a little bit of rest now and again, and going into the holidays, well, what better excuse? But that said, might have some pretty good volatility next week too. I don't know. We'll see. But enjoy. I hope you have a great weekend. I hope you have a great holiday, and we will see you all in the next one. Thanks. Bye.